Markets are volatile, headlines are alarming, and investors are anxious. But amidst the chaos, opportunities abound. In this video, we'll explore how to navigate and profit from the economic uncertainty of 2025. The global economy in 2025 is under immense pressure. Geopolitical tensions, aggressive trade policies, and rising inflation have all contributed to a fragile outlook. President Trump's new tariff package, 10% on all imports, and up to 145% on key Chinese goods, has created new uncertainty around global trade, triggering volatility across financial markets. Bond yields are unstable, the 60-40 portfolio is underperforming, and safe haven assets like gold are climbing. Central banks are divided, consumers are stretched thin, and corporate earnings are mixed at best. These aren't signs of collapse, but they are signs of a market entering a new regime, one where agility, insight, and strategy matter more than ever. In a time when traditional equity and bond portfolios are struggling, alternative assets are stepping into the spotlight. Commodities like gold and silver are attracting capital again, not just as inflation hedges, but as safe stores of value. Investors are also turning to real assets, such as farmland, infrastructure, and residential real estate. These tend to perform better during inflationary or uncertain periods because they offer intrinsic utility and long-term income streams. Meanwhile, regions like Europe and emerging markets are gaining attention. Despite slowdowns, their valuations are more attractive, and some are less exposed to the direct effects of US tariffs and policy shifts. And let's not forget private credit and private equity, two areas where institutional money is rotating in to find yield, especially in sectors like clean energy, AI, and logistics. This is the era of rethinking your portfolio, not just around what's worked in the past, but what's most resilient in the world we're heading into. One of the smartest shifts investors are making in 2025 is moving away from static allocations and embracing tactical asset allocation. Rather than holding a fixed mix of stocks and bonds, tactical strategies allow you to adjust exposure based on market conditions. That means scaling into sectors like energy when inflation spikes, or increasing cash allocation when volatility signals downside risk. Closely related is the adaptive investment approach, a system that actively responds to changing data like interest rates, earnings revisions, consumer behavior, and geopolitical news. Instead of waiting for the market to stabilize, adaptive investors move with the trend, not against it. If the market's narrative is shifting month to month, your strategy should be flexible enough to pivot, while staying grounded in long-term goals. Certain sectors have historically weathered economic storms better than others, and 2025 is no different. Consumer staples like food, hygiene products, and household essentials remain in demand regardless of economic conditions. Companies in this space often have pricing power and consistent cash flow. Utilities and healthcare also tend to outperform during downturns. People need electricity, water, and medicine no matter what's happening in the broader economy. And on a broader scale, gold and Treasury inflation-protected securities, or TIPS, are gaining renewed interest. Gold serves as a fear hedge, while TIPS offer built-in protection against inflation spikes. Smart investors are leaning into these sectors not as a retreat, but as a strategic move to balance risk and preserve capital, while positioning for upside elsewhere. While many investors get bogged down in headlines, some are stepping back to focus on big-picture trends. Thematic investing is about aligning your portfolio with long-term secular shifts, things like artificial intelligence, clean energy, deglobalization, and aging populations. These aren't just buzzwords, they're reshaping entire sectors, and the earlier you align your capital, the more exponential your potential returns. On the other hand, global macro investing involves using geopolitical and economic indicators to guide high-level allocation decisions. This might mean investing in countries with strengthening currencies, buying commodities linked to infrastructure booms, or shorting overvalued sectors exposed to inflation or debt risk. Combining themes with macro awareness gives investors a powerful edge, one that transcends short-term panic and focuses on where the world is actually heading. So how do you profit from economic uncertainty in 2025? You diversify, you stay nimble, you study the big picture, but act on specifics. You don't hide from volatility, you use it, because in every storm, there are trades to be made, assets to accumulate, and opportunities that others will miss while they're paralyzed by fear. I'm Robert, and this is The Alternative Investor. If this helped you think clearer or plan better, hit that like button, subscribe, and tell me in the comments, what's your strategy for investing through uncertainty in 2025?